In the third quarter of 2024, household debt reached a record $2.5 trillion in Canada. So are the banks prepared for a massive debt deleveraging? That's exactly what we're going to get into. Let's do it. The banks in Canada have been beefing up their loan loss provisions, and many Canadians believe that the banks are on solid ground. They're invested in global markets, they're invested in many different countries, they're all over the Caribbean, as many of you will know. So on the surface level, it seems like Canadian banks are really well diversified. But when you look under the hood, the amount of loan write-offs that are going on are just increasing. The default rates on mortgages are going up. And although some people will point to it and say, well, they're still low right now, the rate at which they are increasing is absolutely incredible. And it's just increasing ever more each month and each year. And the problem is, for Canadians, we are heading into a dark economic time, whether people realize it or not. There is no help that is on the way right now. And what that literally means is the economy is currently heading off a cliff and there is no soft landing. So Canadian banks have loan loss provisions which they set aside for bad loans, essentially. So these are loans where they don't work out and they have to write them off. And if you look at the loan loss provisions for Canadian banks, it's currently less than $5 billion. And whilst that might sound like a lot, if you put that into the context of how much debt is outstanding for these banks, which is trillions of dollars, then suddenly less than $5 billion does not seem like a lot. And you've only got to be a critical and logical thinker to work out that with the default rate rising and with the loan loss provisions not rising enough, eventually rubber is going to meet the road with these banks. Eventually, you're going to see defaults that are going to a point that the loan loss provisions don't even cover them. And yes, the Canadian banks, they're not the worst banks in the world, and this isn't a video to scare you and to get you to get all your money out of an ATM. That's not what I'm trying to do here. I'm trying to point out the risk, and especially because a lot of retail investors actually invest in these banks. So if you're investing in one of these banks, then you need to be hyper aware of what's actually going on behind the scenes, because as with all markets, they essentially trade psychology, whereas people think that they trade fundamentals, and fundamentals do hit markets hard occasionally, and that's where you get massive corrections which can evaporate people's wealth. So you've got to be hyper aware of what's going on. There is obviously potential that there could be a banking crisis, and we've definitely seen the amount of dollar trades in the repo market that has absolutely exploded. That is not a good sign at all. We've seen banks like Laurentian Bank, which is a systemic bank because it is a chartered bank, that look ultra risky. And that all leads to the question, is there a bigger problem going on within the monetary system? And that is certainly something that could be happening. When you look at what is happening around the world with global markets, with the tariffs, with the trade tensions, and all the volatility that we're seeing, you've got massive positions as a bank riding on huge amounts of leverage, let's say in commercial real estate. Then that heightened volatility and a flight to safety can make you at risk when everybody rushes to the exit, and guess what? Nobody can fit through the door. And that's exactly where a lot of the risk lies right now, especially if you look at the commercial real estate market, which I've been talking about as a major concern now for the past 3 years. It's just an awful time to actually be investing in this sort of stuff, and it literally just sits empty. Just like this building right here, it's empty. And after this, I'm going to be going to a 40,000 square foot building that is empty, kind of like the one behind me. So it begs the question, they're literally 10 minutes apart. Why on earth are they building a massive 40,000 square feet facility right here, and literally over there's one that's empty, and then you've got all these buildings here that are empty, and then you've got the ones over there. The commercial real estate market got hit hard by the pandemic, and that market was full of debt and leveraged instruments. Have you ever sat there and wondered how so many office towers in Calgary could sit vacant for years and years with nothing actually happening? Well, this is part of the issue. It's due to the mispricing and overvaluation of buildings, and currently that is actually crumbling. And if we continue to see that crumble, you've even seen big pension funds exit positions in commercial real estate, and you've also seen fire sales going on with commercial real estate. And it's not just commercial real estate that's a huge problem in Canada. You've got residential real estate. You see, it's not just the real estate itself that is the issue. You've also got all the billions of dollars that have been lent out for condominium projects, which are currently, again, mispriced. And what you're seeing happen is banks are now beginning to issue blanket appraisals, which is basically just committing fraud on the valuation of a building, where essentially they value all the units in the building so that people can get mortgages, because if they didn't do it that way, then guess what? They wouldn't be able to get a mortgage, because for a lot of these people, the value of the condominium that they agreed to purchase years ago is now worth less, and they can't get a mortgage for that condo. And that presents a huge amount of systemic risk, which is in the financial system, because these buildings, they're not cheap to construct. They cost billions and billions of dollars, and there is so much of them specifically concentrated in Vancouver and Toronto that you've got global coverage on this right now, whilst a lot of people are actually looking away. You see, this could create huge ripple effects and cascading effects for the banking system, because who knows how many other derivative products were sold off the back of these completed projects and what they were going to earn. And now you've got developers that are going bankrupt or getting thrown off projects, and you've got just all kinds of insane things going on, even to the point that I was actually speaking to somebody that had been monitoring the townhomes that were recently burnt down in what looks like arson.
In a building above Scullard Street near Bay and Davenport, residents in this Yorkville neighborhood woke up to find the building behind me fully engulfed in flames.
And he told me that he was saying to his colleagues, what's going to happen with this? Because they had not been doing work for over 6 months. And then what happens? One day it just burns down all of it. And we've seen the arson attacks that are happening on new construction and new developments. And you don't so often see it in the condo market, because obviously it's much different and they mostly have security on site there. But you're seeing that people, even in residential real estate, are so badly damaged by what's going on that it looks like they're prepared to actually burn down the house in order to try and get out of making a deal, which they'll potentially lose hundreds of thousands of dollars on, or not even be able to complete, and then risk being sued by a developer. And I'm only describing a few of the issues that are going on right now in the financial system. There are many more than that. But the fact is, the real estate bubble really poses a huge risk, and it's really the household debt bubble and also the private debt bubble that has been built on the housing market and the simple over-reliance on the housing market for the economy. And recently, Better Dwelling pointed out that the New World Economic Forum sponsored Prime Minister Mark Carney, who is working with the Condo King in Vancouver to bring some government subsidized program to push more people into rentals. And basically, everybody is trying to do whatever they can to stimulate demand as the real estate bubble fractures and implodes right now within the industry. People are scared for their livelihood and their jobs. For many years, the real estate industry was just an amazing place to be, where you could earn what seemed like endless amounts of money selling real estate to speculators, drug lords, and over-leveraged borrowers. And now this is coming to haunt Canada at the worst possible time, when Canada is already in a recession since 2022 on a per capita basis. And if you exclude population growth from the GDP, then Canada is most definitely in a recession. So all that begs the question, what is Canada heading into right now? Is it heading into a depression? And it seems likely that way. And you've also got crime that is absolutely exploding and that is higher than the United States. And it's no wonder, because you've got desperation on every corner right now, and people are literally on the edge of not paying their mortgage or their bills. It is a tragic time for the Canadian economy. So anyway, I want to thank you so much for watching this video. If you've enjoyed this video and want a couple of ideas on how to protect yourself yourself, then go and check out this video here. And then if you want access to the best VPN, that is ExpressVPN, go to expressvpn.com/marketmania. That also helps support the work on this channel. Thank you so much, and I will see you in the next one. Take care, guys.